Hey everyone, welcome in to another daily editorial here on the KE Report. We are chatting with Craig Hemke, founder and editor of TFMetalsReport.com, which we will link to below this interview. And Craig, as always, we talk about the precious metals, but we have a lot of positive aspects to touch on for the metals. Look, as much as we've chatted this month and really this year about how well gold is hung in there, it's been the stocks that have really disappointed investors. That all seems like it is starting to change. Over the last almost 2 weeks now, we have seen, there was a bit of a washout at the beginning of this month, but then we've seen some higher volume. And especially this week, we've seen the majors trade on higher volume and start to take out some of those consecutive lower highs. So maybe on the shorter term basis, a turn in these charts. And again, it's the volume that stands out to me on these majors. Craig, your takeaway, again, filtering down into the stocks that are finally getting some attention.
Well, yeah, it's very interesting regarding the time of year as well. I mean, we're heading into tax loss selling season those first couple of weeks of December, and all of a sudden there aren't as many losses to be harvested or applied versus gains. I looked a couple of days ago. I think gold was up 12% year to date. Maybe this was back on about Tuesday, so a little bit ahead of what is annualized for the last, since the year 2000. But the GDX was only up 8% and clearly lagging and frustrating. But man, I tell you, yeah, gold and silver really moving up solidly, and we can talk about that. But I don't know if you want to call it confirmation of that or whatever, but the interest that's picking up in the shares, and it's following the kind of typical pattern that we see when the metals are making a strong move. And that is that the majors go first. And there's a reason for that, because there's nobody outside of like the three of us and the people listening even care about the precious metals or the mining shares. It's not on anybody's radar. They're not held, but any sizable amount by institutions or high net worth people or anybody like that. And so when gold starts to pick up, and here gold's north at, a couple percent north of 2000, what happens? A guy thinks, yeah, maybe I ought to take a look at getting some gold. They don't know how to get any gold, and they don't know how to, and they don't have any time for the physical metal. And so what do? They buy maybe an ETF, or they buy a big miner. They call up their stockbroker. Hey, let's get some gold. And the stockbroker's like, I don't know anything about gold, and they know they can't make any commission on metal, so they say, hey, let's buy some Newmont. I know what Newmont is. That's the largest miner in the world. And lo and behold, you get these big volume pushes. Newmont's interesting as well because it's just been so terrible. I mean, more than cut in half from its highs early this year. Interesting, though, to note, and again, this is just another positive sign of many. I saw a tweet from Rafi Farber earlier today, and he pointed out that back on November the 7th, at the low of Newmont, where it got down to like 34 or 33 and change or whatever it was, lowest it had been since, the big pullback as COVID was setting in almost 4 years ago. Anyway, on that blowdown day, they traded 100 million shares of Newmont. And so what do you look for in a capitulation, final blowout dump, something like that? Drop down, big, massive share volume. The action in a couple of days since just kind of kept probing that level and not going any lower. Classic sign of a bottom. And now Newmont's moved up sharply. I would imagine it's going to continue to go as gold goes higher. And one last thing, the chart of the GDX is fantastic. And if you'd like me to address that, I'll be happy to talk about it in some detail. But the chart of the GDX just looks great. So I think we should, you got tax loss selling season in the way here for a couple of weeks, maybe. The GDX sure looks like 33, 36, and then, sometime in the new year, maybe even 46. That's 50% higher from here. So it's not like the train has left the station.
Yeah, Craig, it's pretty interesting to see the strength of the majors, as you and Corey pointed out. Newmont doing so well as kind of the flagship gold stock that most generalists would turn to. Same thing with Barrick, same thing with Agnico Eagle. And GDX is really made up of a lot of those majors. Same thing with GDXJ. We say GDXJ is the juniors, but really a lot of the companies in there are big mid-tier, some of the majors, and a few of the largest development companies. But you bring up an interesting point that we normally see this flood of interest when the tide turns into the biggest cap miners first, and then it works its way down the food chain. You mentioned there at the end that there's still a lot of upside you see in GDX and GDXJ. So let's dive into that, because some people see things lifting off. They see gold near all-time highs. They're thinking, well, I want to wait to make sure we're really in a bull market before I get into it this time, because I'm like Charlie Brown having the football pulled away from me over and over again, and I don't want to see these things pull back. Do you think we actually have the momentum for GDX to get up to 46 next year?
Yes. And I think it has momentum to move in the short term as well. Let's start with a fundamental measure that everybody is familiar with. I mean, what's the most expensive input in the mining industry? It's energy, right? Crude oil cost, diesel costs, run all the machinery. Well, what has happened over this quarter, really, to energy costs? As October began, we had, the war, and all the conflagration, if you will, in the Middle East, and crude oil got up to about 90, but now it's 75, and solidly maybe 10% lower than it was when the quarter began. So when the miners get around to reporting earnings again, especially the big producers, and now, we're talking late January, early February, well, their input costs are going to be coming down and going to be reported as being less. At the same time, you go back to the end of September, in the beginning of October, gold's down there like 1850. It's fully 10% higher. So, provided things kind of stay the same here as we, work our way through December and into January, we're going to be looking at substantially better earnings than expected for many of these shares. And that, generates its own upside momentum. So that's important. And again, I think you can see this. Obviously, I think there's a strong case to be made for both metal prices. But I'd invite anybody, even an amateur technician such as myself, can see how tremendous the chart of the GDX look. And I'm talking the daily chart. If you pull up a chart that goes back just this year, go back to January, there's two classic, basic TA 101 bottom formations on there. The first one came back in February and into early March. It was a double bottom. Escaping the second bottom was an actual, what we call an island reversal, where you gap down, fooled around for a couple of days, then gap back up, leaving those candles down there looking like an island, not connected to anything. At that point, the GDX rallied something like 35%, went from about 30 to north of 36, maybe 28 to 36, whatever it was, over the course of a couple of weeks. It has since come down, and now, currently, we have almost a perfect inverse head and shoulder bottom on the chart. And throw this on there too, on that right shoulder, another one of those little island reversals down below the shoulder line. Price has now since broken out above what people would call, again, like a lower shoulder or a neckline at 30. It's broken out above its 200-day. It's holding above both. Looks like the most recent low is in, which is why it's pretty easy to project 33 or 36. So technically and fundamentally, it looks like the miners have some room to run. Won't be straight up, and again, we'll be fighting some of these tax loss selling things, but I sure wouldn't be surprised if the last couple of weeks of December aren't pretty strong again for the mining shares.
Well, let's hope so, because it has been, again, just in this last week, constructive, seeing these ETFs and some of the larger stocks break above those pretty strong resistance levels. Craig, what about what's happening in the broader markets, too? There has been a nice kind of rebound in a number of markets. Do the gold stocks need the other sectors, the other markets, to also continue to rally in tandem with what they're doing?
Oh, maybe. I'm not sure I would correlate the two together, given, like I said, the fundamental and technical picture of the mining sector at this moment. I mean, it doesn't hurt. You could also say maybe, if you kind of run away from growth and more toward value, which is what the major miners would represent at this point, maybe that would be beneficial to have it go the other way. I don't know. I think we're kind of picking at it a little bit to try to frame it that way. In general, though, Corey, the way interest rates have come down over the last couple of weeks, I mean, the 30-year long bond in the U.S. from late October through yesterday had fallen 75 basis points. And the dollar index, had fallen from about 107 down to 103. So it's been a pretty, I don't like using the term risk-on environment for all of this at the same time. And so if that kind of environment continues, I can't imagine it wouldn't help. But I don't know if I can again, the fundamental and technical picture is so strong, and I really like where the metals are as well, that I don't know how much of an impact general trend in general equities will have.
Yeah, Craig, and it does seem like everything is getting a bid, but a lot of that is due to, as you pointed out, rates coming down, and the U.S. dollar has also come down. That's a boon to all markets, but also a boon to the precious metals. But it almost seems like gold is sniffing out something totally different here. I mean, we should make the point today. It's a historic day. We're having the strongest monthly close in history in gold. We're going to be over 2,000. That's an important point. But if you look at the two contracts, the December contract's around 2036 right now. The February contract, which most platforms are using and will be flipping over to just in days here, and some platforms already have flipped over to, is at around 2058 right now. It was up to 2068 last night. So any way you slice it, any futures contract you look at, gold is going to make a new monthly high today. How important is that to the longer term picture?
It's extremely important. And as you note, the spot price is going to close, well, I mean, at this point, I'd say has closed above $2,000 at the end of a month for the first time, you could say in recorded history, going back to the pharaohs and the pyramids, right? It's a joke. I mean, there weren't dollars back then, but you guys get the idea. And that's significant. Again, it's a nice, happy moment for all of us, and look at this and all that. But as we've discussed and as we mentioned earlier in this call, that's the kind of thing that gets the attention of the generalist. The family office, whatever they want to call that hedge fund manager or whatever. And all of a sudden you start getting these headlines. Look at this. Gold finishes the month above highest all-time monthly close. Think if we do this again, we even just go sideways in December and we finish the year with a 2,000 handle or the highest quarterly close of all time, that sort of thing. Again, the bigger picture people that move they're not just traders and swing traders and looking for pivots and all this kind of stuff. The people that take a substantial position then and hold it for a while are going to look at the longer term charts to try to identify those trends. And that is why a $2,000 close on the monthly chart for the first time ever is really a big deal. It's not just, oh, look at the gold bugs. Look, they're all excited, $2,000. No, it's a big deal. Because as we discussed, I mean, what's the total global asset allocation to gold and the mining shares? Like 1%? If that just over the course of the next 12 months goes to 2%, price isn't still going to be 2,000. The GDX ain't going to be 30. So it's a big deal.
Craig, to your point about some of these traders out there, too, there's a lot of momentum traders, and quite frankly, gold has gone up almost $240 in under 2 months. So that is a significant move in itself. That has to bring in some of the momentum traders, especially considering that breakout level. Momentum does like to chase itself.
Absolutely. And hey, let me throw this one at you. Anybody can cherry pick dates, right? You could say, well, since the year 2011, gold's only up this. Or you could say, well, since year 2015, though, gold's up. Anybody can do that. But I did see a tweet that I thought was interesting, because I think we all recognize that seasonally, this is a pretty good time. The end of the year and the first month of the year is usually a very good time for gold. You get, big time gold buying out of India. We're also seeing that ahead of the wedding season, and all that kind of stuff. That happens every single year. We also see when gold's expensive, a rotation of silver. So physical silver buying picks up, all that kind of stuff. So there are actual fundamental reasons for why December and into January are good seasonal times for the metals. The thing I'm getting at is I saw a tweet, I don't know, earlier this week, late last week, the last six, I mean, it was just six, but the last 6 years, there's not been a down December, and the average gain over the last 6 years in gold prices, 3.7% in the month of December. Well, hell, what are we? We're 20, what do we decide it was in spot? 2040? 4% from here would be $100. Can you imagine if we finished the year above 2,100? Talk about the generalists and the headlines. So, yeah, it's going to be a very busy month in terms of economic data. We get the next FOMC meeting where it's very likely that this next summer of economic projections that comes out on all the quarterly months of March, June, September, and December, they're going to add back in a projected rate cut that they took away back in September. There are a lot of things that will conspire to drive the metal prices higher in December and into the end of the year. And again, all of that just kind of trickles through, and it all completes this kind of overall bullish picture for the metals, where all these one thing seems to be confirming another as we enter the month of December.
Well, Craig, I'd be remiss if I didn't ask you about silver. It's not really at the same place gold is. Silver is not getting ready to break to new all-time highs. It's not going to have the highest monthly close. It's been stuck in the middle of a range. It has gotten back above $25, which is a positive. It's had a nice move. Do you expect it to actually really start to play some catch-up? Can we get through some of the overhead resistance levels if gold breaks out, or is silver on a different trajectory because it's got a dual process of an industrial metal and a precious metal?
Boy, Shad, that's the question, right? I mean, silver has confounded me and everybody else now for a dozen years, right? And we all sit around. There are probably a lot of people out there who don't even remember 2011, right? Some of the silver squeeze folks from the last couple of years. But I will remind everybody, I mean, that's typically, you go back to the late 70s and 1980 or what happened in 2011, that's kind of how silver rolls. And I mean, silver went from 18 to 48 in 8 months. In 2010 to 2011. And what happened is it kind of takes on a life of its own. Corey mentioned momentum traders, and the thing just starts building and you start squeezing some shorts, and that's what happened back then. So it's conceivable that silver, kind of like gold, moves above 28 sometime in the new year, and all of a sudden it's 29. Oh, wait a second, silver's 30. And it kind of generates its own little virtuous cycle of positive momentum. And I mean, open interest in COMEX silver, only 134,000 contracts. That's 100,000 below the all-time high. The net position of the large speculators last week was about 27,000 contracts. I've seen that as high as 90 or 100,000. So there's all kinds of room, if you want to put it that way, of hot speculator money to come in and start chasing price and just bidding it higher and higher and higher. So it's a possibility. Here's the other thing I'd point out to people. Just from a more pragmatic sense. I think there's a really strong case. You guys remember my macro cast I put out back in January was, we'll fiddle around for 6 months, we'll be strong in the back half. I was about 4 or 5 months early in terms of Fed policy and economic data and all that kind of stuff, but we're all right on track for that. When gold makes a new high, like anything else, it'll probably overshoot by about 10% and get above 2,100 and go to 2,300, just in all this excitement and momentum and everything else. Well, if I'm right about that, and sometime in the first half of next year, gold goes to 2,300, does anybody think the gold-silver ratio is going to be 100? So pick your number. If the gold-silver ratio should be 75 at that point, Shad, help me out here. What does that imply? Like a $32 silver price? I'm trying to do the math in my head real quick. So I think there's a lot of reasons to think that silver can finally break out too. And then it's just a question of whether it kind of takes on a life of its own like it has in the past.
Yeah, that's really what we're waiting for, isn't it? Just for silver to start generating kind of its own momentum. But look, a lot of people have been pointing to gold needing to break out, and that is what can lift the stocks and also lift silver and start to generate their own momentum to the upside. We're at that point now, right at the end of the year. So what does December hold? What does the new year hold? At least we're ending this year on a, seems like, very positive note, albeit still a month to go. But this monthly close and some of that action in the stocks, very encouraging for the precious metals investors. So Craig, thank you very much for your time. We'll chat next week. Hope you have a great weekend.
Take care, guys. I look forward to talking to you next week.